Hi there, welcome to Kneppy Invest. When I compare my skills as investor right now to when I started investing well over 10 years ago, there is a night and day difference. And one of the reasons why I have improved as an investor, and hopefully every investor improves as an investor, is lessons learned. And hopefully you have made some mistakes in the past. I have made plenty of mistakes in the past. And the main reason mistakes are beneficial is because we can become better investors if we learn from our mistakes. Now, I'm going to go through the lessons I learned from investing in a company called Wellfully. Now, when I invested in this company called Wellfully, it was actually under a different name. And I did get caught up in the hype of this company about 10 years ago. So in this particular video, I'm going to go through the history of Wellfully and also discuss some of the lessons I learned when I did and was an investor of this company. Not only when I was an investor of this company, also after I sold out at a little bit of a loss, I still kept on learning from the story of Wellfully. My history with Wellfully began just about 10 years ago when they went under a different name called OBJ. Now, I started following this company in late 2013 when there was increasing interest in this company, a little bit of hype around their story, around the potential of what they were doing with their magnetic microarray technology. Not only was it increasing interest, share price had moved into an uptrend, increasing volume. The company released an announcement on the 28th of April 2014 that showed that this company definitely had potential. Now, this agreement was with Procter and Gamble. So Procter and Gamble signs multi-product PDA incorporating first product license. So understandably, this particular announcement got the market really excited. The share price of OBJ at the time rose about 90 to 100% in one day. A lot of interest around this particular announcement. Now, when I look at this announcement now, with more than 10 years of experience, well, more than 10 years of experience from this, well, almost 10 years of experience, added experience from this particular announcement. The one thing that is missing, the one thing I would like to see when a company releases this sort of announcement is numbers. So even though this company had a lot of story, a lot of talk, there was no numbers in this particular announcement. No numbers in regards to the royalty payments. They mentioned the last point here, royalty payments payable to OBJ on further licensed products, which is interesting, on further licensed product, not on this particular license, but on further licensed product. So one of the major lessons I learned from Wellfully, or OBJ as I was known at the time, is when a massive company like Procter and Gamble does a deal with you, more than likely the terms of the agreement are going to be in favor with the larger company, unless the deal significantly benefits the larger company. And in this case, I don't think this particular deal benefited Procter and Gamble at all. At all. And we can see that with the lack of numbers. We can see that with the lack of cash receipts that OBG received from Procter and Gamble over the following few years, which I'll touch upon later in the video. Between April and September 2014, the story, the hype, the interest in OBJ remained quite solid. Share price went sideways, or maybe even rose a little bit, and then the hype reached its peak on the 3rd of September 2014 when OBJ released this particular announcement. Procter & Gamble launches first product incorporating OBJ technology. It was through the SK2 brand using a wand which was incorporated the OBJ technology just for enhanced delivery. I believe this was an eye care kit, and it was being sold in Seoul, South Korea. So I think at this point in time, SK2 was quite popular throughout Asia, Southeast Asia, maybe even Australia. So this was the peak hype in OBJ. The market loved it, and the share price went to an all-time high on 3rd of September 2014. But there were dark clouds on the horizon for OBJ, and that's why the share price reached a high on this day and has never been higher. Now, this is a chart of OBJ as it was known at the time between May 2013 and October 2014, so about an 18-month period. And this is actually a beautiful looking chart. beautiful uptrend developing for OBJ. And this is the main reason I started following the company in late 2013 when the share price had moved out of this consolidation period just above 2 cents. And the share price kept on creeping higher. Now, peak acceleration interest or hype in this company occurred when they announced the agreement with Procter and Gamble in April. Share price on that day rose 90% on historic volume, massive volume coming through. The market loved it. And then the share price kept on creeping higher between April and September 2014. And when they announced the launching of the first product incorporating OBJ technology, there was some interest on the day. In fact, the share price went from about 9 cents to a high of 13 cents. So roughly 50% increase in share price. But there was a little bit of selling. So instead of increasing 50%, the share price only rose 22%. And the share price high on the day was 13 cents. Now, if you look at the axis or the share price axis, you'll notice the share price at its high on the 3rd of September says $2.60. So why the discrepancy of what I'm saying? The share price high was 13 cents, but the axis says $2.60. Well, the company did a 20-for-1 share consolidation in early 2020s. So you just divide $2.60 by 20, you get 13 cents. But just looking at this chart right now, particularly on the 30th of September, and the thing that would have made me nervous at the time, if I knew anything about charting, and I know way more about charting right now, is that on that one-day candlestick, there was a lot of selling on the 30th of September. Share price went to a high of 13 cents, but the share price actually closed at about 11 cents. So that would have made me nervous just by looking at that one-day candlestick. So the peak interest in this company actually occurred not on the 30th of September, well, actually did occur on that day, but if we hone in a little bit closer, fine-tune when that peak hype came, it was in the first hour of trading. And don't forget that amateurs open the market, professionals close the market, and the amateurs, the retail investors, got really excited when they saw this announcement that OBJ had launched the first, well, Procter and Gamble had launched the first product that incorporated OBJ technology. And when I see a lot of selling coming in the day, no matter the announcement, I would become a little bit more nervous now than I was or had been or were back then in 2014. And then the positive announcements from OBJ kept on being released. This is from the 3rd of September or 3rd of December 2014. Coty, is it Coty? I have no idea. Set to license OBJ's powered technology. So this is another agreement between a small ASX company and I'm assuming a major international company. And just like Procter & Gamble's agreement, there are no numbers here. They do mention royalties payable by Coty on both the one device and associated Coty formulation sales, but who knows? The royalties could be 0.00001% or 10%. That's why I prefer numbers. And then just 2 weeks later, Procter & Gamble announced they were launching that SK2 product that incorporated OBJ technology into Hong'an, Taiwan, after a successful launch in South Korea just 2 months previous. And you'll think, if this was a successful launch in South Korea and they're launching in 2 other territories, that the cash flow should start coming in for OBJ. So my attention started going from these sort of announcements to focusing on the Appendix 4C. So in the next slide, I'm going to show you the cash receipts history of this company, OBJ, between 2000 or late 2014 and 2017. Initially, I was excited, and that excitement faded away fairly quickly, and you'll be able to see why in a second. And this is the history, cash receipts history of OBJ for about a 5.5-year period between the December quarter 2014 and the middle of 2020. I'm not going to really focus on the last half of this, really only going to focus on the first half because, to be honest with you, I quit following this company in about late 2016, early 2017. Now, they started selling that first product incorporating OBJ technology on October 1st, 2014. So it would take a little bit of time for the cash receipts to flow from Procter & Gamble to OBJ. In fact, OBJ had 0 receipts in the December quarter and then only $88,000 receipts in the March quarter. And I still remember thinking, well, this is telling me 2 things. Royalties are probably pretty low, and how much product are they actually selling? And then when I saw the receipts increased from 88,000 to 348,000 between March and June of 2015. I went, oh, that is an interesting increase in receipts, but I need to see that momentum going. And then my interest in this company started to fade away fairly quickly in I'll say middle to late 2015, because receipts went from $348,000 to $212,000 to zero by the December quarter in 2015. And that's when I decided to sell my position in OBJ, because it seems like, even though it was a successful launch of the SK2 product in South Korea, it seems like the fad had faded away fairly quickly. Now, I probably should have mentioned this early in the video. The whole reason I'm doing this video is because of a few announcements this company has released over the past few months, which is highly relevant, particularly to shareholders. And you'll see that in a second. Now, because I really stopped following this company in late 2016, early 2017, most of the announcements I'm going to show you right now, I had to actually go back through when I started, researching for this particular video, and it gives us some good insights to these royalties, particularly this announcement. Quarterly revenues for Wave 1 and 2nd technology. And they mention here some numbers. So finally, we're getting some numbers, and these numbers are fairly pathetic. So for the March quarter, they received through royalties about $94.3 thousand US for one of these products that Procter and Gamble was selling. They also received a royalty fee for the 2nd technology license to Procter and Gamble, and that fee amounted to $125,000 US. And to be honest with you, those numbers are quite disappointing. And this is the daily chart for OBJ between the start of 2015 and the middle of 2020 or 2017. So remember that first chart I showed you, there was definitely positive sentiment behind the company, beautiful uptrend in the share price. So when you look at this particular chart, neither negative or positive sentiment. There are periods of time during this 2.5-year period. Is it 2.5-year period? Yeah, 2.5-year period where there was positive sentiment, periods of time when there was negative sentiment. In fact, the share price was quite volatile, trading between 10 cents and 5 cents. And then in 2020, the company decided to change their name. Maybe this was brought upon by COVID-19, but they say here the reasons behind why they're changing their name. It has changed its name as part of a rebranding that aligns with the focus and activities of the business moving forward. They also mentioned the bottom of that particular section, alongside Reduit and Bodyguard, in addition to the existing programs and licensing agreements, the name change marks another milestone in bringing the company's technologies closer to consumers. One thing I noticed as I was going through this company's announcements is less and less mention of Procter and Gamble. So obviously the relationship between OBJ and Procter and Gamble was struggling by 2020. And then in December 2020, Wellfully released this particular announcement. Wellfully regains rights to technologies licensed to Procter and Gamble. So this is not the end of the relationship between Wellfully and Procter and Gamble, but definitely you could say and argue that the relationship is highly diminished. Now, it did mention at the end of this announcement that the new agreement delivers key benefits to both parties, and I can see that Wellfully has now the right to use their technology in products they develop. But obviously, Procter and Gamble tested, saw this particular technology and went, yeah, this doesn't really benefit us in the long run, but hell, we'll just put this agreement in, new agreement in, and maybe, just maybe, somewhere in the future, sometime in the future, we will get some sort of financial benefit from this new agreement with Wellfully. And as I went through further announcements from the company, 2020, 2021, 2022, almost zero mention of Procter and Gamble. I'm not going to say zero mention because I might have missed something, but obviously the relationship between Wellfully and Procter and Gamble had diminished to almost nothing. And I say almost nothing because then in June 2023, there was further mention of Procter and Gamble. So obviously there was still a little bit of relationship there, but not much. And here is that announcement released on the 19th of June 2023, mentioning Procter and Gamble and their collaboration. Procter and Gamble Braun. Last week, Wellfully received another substantial order from Procter and Gamble for 25,000 units of their microarray product. So obviously there was still a little bit of relationship between the two, but when you look at the cash receipts of this company, this relationship amounted to very little cash receipts for Wellfully. And to prove that point, here is the Appendix 4C, the cash flows from operating activities that Wellfully did release for the March quarter 2023. $56,000 of receipts in this particular quarter, and for the first 9 months of the year, only $329,000 of receipts. And you can see this company's burning through, or was burning through, a lot of cash, burned through $3.5 million just in operations for the first 9 months of this particular financial year. And as I was doing further research on Wellfully, I noticed this article written in or released in the AFR, written by Michael Rodden. Now, I've got to give AFR some credit here, particularly a few of the journalists there, because I have noticed over the past 7 or 8 years that they will go hard at small cap companies on the ASX if they are doing some dodgy things. And obviously, when you go through this particular article, Wellfully were doing some dodgy things. Anyway, let's have a look at this particular article. And it's actually a really good read. So I highly recommend, if you can read this, have a look at it. Most people know that companies hawking wellness products are mainly in the business of selling dressed up BS. But from the looks of it, ASX listed penny stock Wellfully can't even muster the courage to disguise its turds in a little glitter. Beautiful writing there. Take a whiff of the $2.3 million placement Wellfully launched in early October, led by Perth stockbroker CPS Capital. A subsequent announcement noted that as part of the placement, Wellfully had signed up a new contractor, Diamond Trading and Salting, which had tasked with ensuring a robust monitoring of social and business media forums and, where appropriate, correcting any misleading or inaccurate statements made on those forums. And that is really interesting. And they've got a little picture of Hot Copper there. So obviously Wellfully were following stuff that were written by them or written about them on Hot Copper. They didn't like what they saw, so they decided to sign up this contractor, so this contractor can go to Hot Copper and dismiss all these negative stuff that were written about Wellfully. But then it goes a little bit further in this article. For this job, which to be wholly consist of lurking on gruesome online forum Hot Copper, Diamond will receive 5 million fully paid honorary Wellfully shares. Now, to be honest with you, those 5 million shares are worth zero now. I'll get into that in a second. Diamond will get a further 5 million shares if the Wellfully stock price rises from 2.2 to 2.64 cents. They make these things hard, don't they? And a further 10 million options exercisable at 2.2 cents. At current prices, that's a minimum of $242,000 for 6 months worth of inane stock forum posts, even before options are converted. And to be honest with you, Wellfully, I could have done this for $10,000. You could have paid me $10,000 and I would have done this. What a deal for Brisbane-based Diamond directors. I won't even try to pronounce these names. But these two names, Crystal Hazi-Papas and Sava Hazi-Papas, have been in the news quite often. And he actually mentioned this at the end of this particular page. Those siblings, notably, are the children of George Hazi-Papas, who you may know as a former executive chairman of ASX-listed minnow Zyber. And that Zyber is a story on itself. But back to Wellfully, which isn't exactly virgin territory for the Hazi-Papas clan. A Wellfully prospectus in February this year noted an entity called GAX Investment Holdings, which was its largest shareholder. So GAX was Wellfully's largest shareholder, with 11% of shares on issue. Crucially, GAX never filed a substantial shareholder statement. I would say that's against ASX protocol. So that's interesting. Yet GAX was absent from 20 largest holdings in Wellfully's October annual report. That might be because GAX was placed into liquidation in March after court ruled in the Puddick's favour. George's wife is the sole remaining director of GAX. A statutory report in June by core Cordis liquidator Andre Lacombe noted GAX, which traded 10 million in ASX listed securities over a 2-year period, was likely trading insolvent from at least the 1st of July 2010. So again, 1st of July 2010, about 12 years previous to this particular article. Now to the whole reason I'm recording this video. Now, it wasn't this particular announcement that I saw because I wasn't following this company at all. So I missed this announcement that Wellfully on the 21st of August 2023 had gone into administration. So obviously, this is the end of the company as an ASX listed company. Now, there is a potential path future path for this company as an ASX listed company, but I think not as Wellfully. Maybe as a shareholder company, and there could be a backdoor listing, that sort of thing. But definitely, Wellfully had their time to shine. They couldn't succeed in what they were trying to do, and they are no longer a company. And it wasn't until the 22nd of September that I saw this particular announcement that I went, oh, Wellfully's gone into administration. And to be honest with you, I was not surprised at all. In fact, maybe I was surprised it took this long for a company that obviously couldn't succeed in what it was doing. And here is the chart for Wellfully going back to 2016. So remember that previous chart I showed you where the share price was trading between 5 cents and 10 cents. So that peak in the share price back in 2016 at about 10 cents, it got no better than that. And the share price moved into a well-defined downtrend in late 2016, early 2017, and just kept on falling. And remember, they did that 20-to-1 share consolidation in 2020. So in fact, the share price, if you take into account the share consolidation, fell from $2.10 to 0.4 cents. That's right, $2.10 to 0.4 cents. This company absolutely destroyed their shareholder wealth. So how much did this company destroy shareholder wealth? So just imagine back in 2014, you're an investor. In fact, you're a long-term investor. So when you do research on a company, you want to own shares in a company for the long term. You're thinking 10, 20 years because you believe your research is foolproof and you don't make mistakes at all. And then you did some research on OBJ and you thought this company's going to make it. This deal with OBJ, with Procter and Gamble, is a company-making deal. This company is going to be huge in 10 years' time. So you decided to buy 20,000 shares at 10 cents in 2014. Those 20,000 shares in 2014, if bought at 10 cents, were worth $2,000. And you didn't sell. Even though the company went through all these problems, you decided to hold firm. You believe not selling your shares when you buy them. Yes, what a great philosophy that is. Great trading strategy. Don't sell ever. And then don't forget the company did a 20-for-1 share consolidation in 2020. So your 20,000 shares then became 1,000 shares. And then just before the company went into administration, the last share price was 0.4 cents. So your 1,000 shares were now worth $4. Yes, $4 at a share price of 0.4 cents. So your value of your shareholding in this company went from $2,000 in 2014 to $4, not quite 10 years later. Now, as investors, we're always looking for baggers. We're looking for 5 baggers, 10 baggers, 100 baggers, 1,000 bagger, 10,000 bagger. So I've never had a 10,000, 1,000, even 100 bagger. I've had a few 10 baggers, and they are great, but I've never had a reverse bagger of 500. So I've never seen the share price of a company I own go down 500-fold. Now, that's not including companies that have gone bankrupt. So to be fair with you, this particular shareholder who bought shares in 2014, the value of those shares are now worth $0. But to be fair with you, the difference between $0 and $4 is virtually nothing. So this is definitely a company that has destroyed shareholder wealth over the past 10 years after a really promising story back in 2013. What are some of the lessons I've learned from the story of Wellfully? First lesson, I am much more wary of story stocks, way less seduced by the story. When it comes to any company on the ASX, I am more inclined to look at the numbers than the words that the company's management might be spitting out. Now, to be honest with you, the whole reason we have companies on the ASX is so they can raise capital. And that's very important that a company can market their story to the investors out there. But I'm much more wary of companies like OBJ, and I'm much less inclined to take positions in these companies right now. Now, I want to see numbers wherever I go because numbers are much more powerful than words. Numbers can give you information that words cannot. So whenever I see an agreement between particularly a large multinational company like Procter and Gamble and a small ASX company like OBJ, I want to see numbers in the agreement. If I don't see numbers, I am much more wary. And that is actually a red flag in my opinion. I want to see royalty rates. What are the royalty rates? Don't just give me, we have royalty rates and that's it. I want to see numbers. Now, sometimes there's a lack of numbers for reasons. Maybe you don't want to give your competitors any information. That's a valid reason, but I've seen plenty of agreements between large international companies and ASX companies where there are numbers, where there are royalty rates, 10 to 15%, tiered to 20%, that sort of thing. Don't fall in love with companies, particularly if they are story stocks. In fact, any sort of company, because the story can change. And the reason why don't fall in love is really important, because if you fall in love with a company, you're much more likely to ignore any significant red flags. And fortunately, I was never in love with OBJ, and that's why I was able to sell out fairly quickly. So that is a significant a lesson I've learned, is don't fall in love with companies. I have fallen in love with companies in the past, and I have rode those companies down. And if you fell in love with OBJ, I'm sure a lot of investors back in 2013, 2014 fell in love with this company, fell in love with the story, fell in love with the potential, and rode it all the way down. And the value of their shares in this company went from quite a high amount in 2013-14 to zero in 2023. Another thing I've learned, and that is sort of a surprise lesson, is Australian Financial Review, AFR, can be a really important source of information, because I was surprised to see these articles written about Wellfully. So I probably should respect the AFR a little bit more than I do right now. I very rarely read the AFR. So possibly I should be reading the AFR a little bit more than I'm doing right now. So AFR, important resource, is a lesson I have learned. That is all I have for this video. The lessons I've learned from the story of Wellfully. What are some of the lessons you might have learned about this company, or maybe some other companies that you have been invested in the past? I'd love to hear some of the lessons you have learned recently or over the past few years, or since you started investing. So leave those lessons in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.